Good day, everybody. My name is Tom. Welcome to the Auditchain AMA featuring Jason Meyers, the lead architect of the program. Today, we're coming to you from Chicago, where I am, and Jason is overseas right now, coming to us to demonstrate today the Pacioli system and answer any questions everyone may have. Jason, welcome.
Hey, Tom. Thanks. How you doing, everybody? For those in the audience celebrating Ramadan Kareem, right? First day of Ramadan. Today I'm going to go through a couple of things very briefly, and we'll hold most of the detail to questions because that's where we usually expose detail. And if everyone can see, I have the interface for the Pacioli logic and reasoning engine up on my screen.
It's live for everyone to see.
So what you're looking at is the developer's version. This is the dev team's version of the UI interface we use, which exposes every single data point, even down to the syntax level. And what I wanted to show the audience is how we, or Pacioli, was able to see clues about Silvergate Bank, Silicon Valley Bank. There's a bunch of other banks that we're detecting, and we'll show you what we call serious weaknesses in internal controls. Internal controls are related to disclosure controls. And first thing I want to do is I want to do a fresh submission to show everyone how this is outputted. So we take any financial report filed with the SEC, and in this case, we're going to look at Silicon Valley Bank.
And so you're taking one with that you haven't done recently, and you're letting the Pacioli system run in real time.
Correct.
Good.
So we're going to pull up a list of all of Silicon Valley Bank's filings, excuse me. And we're going to go back to the 2021 annual report.
I would say in 2021, it was the height of the recent boom. They were the darling stepchild, or the darling child, I should say, of Silicon Valley.
So what I'm going to do is I'm going to launch the machine-readable instance document, which will look like gibberish, like this, right? And I'm going to copy the URL. And I don't know if you can see everything that I see. But in any event, I'm taking this link and I'm going to insert it into the prompt, the command prompt. Now, Pacioli uses AI, but it's not generative AI. It's natural language processing combined with semantics. But there's no speculation, meaning it's not guesswork.
In other words, the AI is not making anything up on your prompts. It's taking the natural language and running the report and producing the results.
Using rules. They're declarative rules, right? So I'm going to go ahead and run this. This will take about 90 seconds or so to run.
Now, in this 90 seconds that it's running, if Pacioli had not been invented, how long would it take a human to comb through this 10Q and come up with all of these potential errors or missing disclosures?
Well, you don't, because there's what we believe to be shortcomings in financial reporting specifications set by regulators. And those shortcomings have to do with very minor rules that are required by the Edgar Filing Manual. The Edgar Filing Manual has light calculations and mostly syntax verification. We have 9 different categories of rules. Not all of them are going to be run.
Okay.
Right? Because we're still tweaking some of the other rules. But there are 2 major rules. One is calculations, and one is a disclosure. 3. One is calculations, disclosure mechanics, and checklist rules. Right? So what we're going to do is we're going to determine whether or not all disclosures were made, and we're going to determine inconsistencies in calculations. So what that means is when you apply the right accounting rules, did it calculate the output correctly? And the most simplest thing I can say is, did the balance sheet actually balance?
Right?
Now, most people may not realize this because we are talking about a regulator, and in the SEC's case, they're the largest securities regulator on the planet. And 83 balance sheets that were filed as of September 30th, 2022, 83 balance sheets did not balance. So the Edgar Filing Manual rules don't catch nearly as much as we have very sophisticated rules that are able to detect things that the CEO didn't detect, the chief financial officer didn't detect, the controller, chair of the audit committee, the auditor, and of course the SEC.
I think that my follow-on question is, would they be able to detect that in a micro review of the filings?
Not without a rules engine sufficient enough to pick up the inconsistencies.
And what we've been watching here on the screen in real time is Pacioli coming through its steps and applying its rules while we've been talking. Is that correct?
That's right. All these rules have been applied. So I'm going to go to the technical analysis. Tom, just tell me if you can actually see it.
We can see your whole screen. We can see from the menu at the top all the way to the bottom of the altering facts and rules box.
What do you see now?
I see the green part of the results of the rules applied, and I see the bottom box below. It says altering facts and rules.
All right, so I'm going to share this tab instead. Hold on one second.
Okay, SVC Financial Group, 10K for fiscal year 2021.
Perfect. So this is the Silicon Valley Bank annual report for 2021. You have a table of contents, right? The extended resources that were added and the other options show up here, right? Again, these are not a comprehensive full list of our rules that we applied to this report, right? And then you have a table of contents for each element of the financial statement, right? And you've got all these elements, your balance sheets, income statement, comprehensive statements of income, stockholders' equity, cash flow statement.
Right.
You've got disclosures like the nature of business, right, which is the profile on the front cover of the filing, which is machine readable. Your accounting policies are machine readable. The earnings per share, share-based compensation, all these items on the table of contents, and we've got a total of 176. So what I'm going to do, just to give everybody a look at this, is I'm going to click this button here, which is going to give me a list of all of the rules that were violated. So here's a summary.
See, it seems to be a long list.
Yeah, so you've got 44 inconsistencies with calculations, and you've got 20 inconsistencies for disclosure inclusions, which means that there were 20 items where disclosures were not included, right? Now, each one of these are a link, and it's going to take us directly to the exact nature of all of the terms and concepts and facts that were affected by this, right? So if we go to this particular link, which is a balance sheet item, a calculation for a balance sheet item under assets, it's going to take us here, okay?
Yep.
Now there's a total of 8 instances where there were inconsistencies in how this particular item was calculated, right? So here you have the US GAAP, which is the reporting scheme. Assets is a definition in the US GAAP taxonomy. There's your fact, right? Cash and cash equivalents at carrying value, right? Plus this here is a function, plus US GAAP investments, plus US GAAP property, plant, and equipment, plus other assets, plus operating lease right of use asset, plus other intangible assets, plus goodwill, plus notes receivable. So as you can see, these were the affected concepts, and these were the affected facts by this inconsistency. And it shows you a difference, right? And in this case, that difference is $768 million. Okay?
That's not a little bit. That's a lot.
You have a difference of 123 million. You have a difference of 422 million, 859 million. Here's the big one, 15.69 billion.
In layman's terms, basically for me and my fellow hosts, that 15 billion is the difference in what's reported versus what the real number is.
Correct.
That's crazy.
So if I go back, we can go and look at another one of these items, right? Let's go to parent company only condensed financial information asset, which is an instant item on a balance sheet.
Alrighty.
So it went back to the same area because this was one of the instances that were miscalculated. So let's move out of the balance sheet and go to revenue recognition. That's a disclosure item, okay? And as you can see, it didn't detect a required disclosure, right? Now you can go to the actual rule that was the subject of the disclosure, right? Which is a roll-up item, and it's a machine-readable file, right?
That the XBRL.
Yeah, it's an XML file. Most developers know what XML
Right.
is. It's part of the semantic web. It's a well-established standard. It's the way information is communicated over the web. right? So you've got a prior period error. There's that rule, right? And then let's see what happens if we click. Oh. This is your required disclosure, right? This one is your machine readable, and this one is your human readable, but it didn't detect it. It was supposed to be included, but it wasn't, right? These terms, disclosure, hypercube, concept, arrangement, pattern, and axis, these are all, oops, you guys didn't see that, or did you?
Nope.
Can you see this?
We're looking.
Term details?
We're looking at the screen with the blue and black text, the two columns.
Okay. So these gray means that it wasn't included, right?
Right.
So the rule didn't actually get run because the rule didn't detect a disclosure that it was supposed to apply a validation to. So they weren't run, right? Now we can, one of the things I like to do, because humans read financial statements.
Do they?
If we go to the main, well, sometimes they do. We go to the main page, we can look at a pivot table of, for instance, in this case, the consolidated statement of comprehensive income. And that pivot table will show the income statement, and it will show in red all of the facts that were impacted by those inconsistencies, right? So if you're a certified financial analyst and you're allocating capital, you can use Pacioli to determine whether or not a financial statement and its data is even reliable, whether or not the logic is reliable, and whether or not you want to even bother hand rolling this so that you create a financial statement without management that would have corrected some of the items that are inconsistent in your findings in this output, right? Here is, you've got comparable periods here as well.
Yep.
And then here's the fact table, which shows you where the inconsistent facts are, right? All this is based on global standards, right? ISO is a global standard.
Yep.
They are standard settered. XBRL is included as a standard at the ISO level. So we're not asking anyone to do anything that is a complete, total reinvention of the way they do things, the way they read information, and the way they consume information, right? And the way machines consume information. So by using this, right? See, if you were, if for instance, well, I won't use Silicon Valley Bank because you don't know what's going on inside four walls unless you're sitting inside those four walls. But a company that uses our other Luca suite would not have any of these inconsistencies, assuming they were honest and assuming they were complying with all the rules, right? Accounting rules, financial reporting rules. You wouldn't have any of this, right? And the reason why is because the software that these companies use is built only to regulatory specifications.
Right.
Our software is built to a much, much higher standard so that we can detect this stuff. Because the world's investment managers are relying on this information to allocate capital around the world. So it would be a true statement for me to say that capital is now being allocated based upon flawed information. And I'm trying to be diplomatic about it, right? So what I also want to do is show you guys this, right? Which a lot of you have seen this already. You see the map?
Yep.
Yeah. So at the end of the third quarter last year, we asked our community to go fetch 3,000 financial reports, file with the SEC, and submit them to the Pacioli network. Each dot is one company, and if it's green, there are no inconsistencies. If it's red, there are at least one. In this specific case here with this map, there were at least one fundamental accounting concept inconsistency. So if you can imagine that you're a regulator and you're on your way to the Hill for a budget appropriation committee hearing, right? You got to go see the chair of the Senate Banking Committee, and this pops up. It's probably not going to be good, right? Our goal is to engage and provoke an open public dialogue between accountants, enterprises, regulators, auditors, to talk eventually about raising the integrity and reliability of financial reporting specifications so that investment managers around the world can rely on this information. But if you ask any one of those investment managers, they'll tell you that they either can't or they don't rely on this information. And here are one of the reasons why.
Just a quick side note, we have a question from LinkedIn that's relevant to this period. Mitch asks, let's see, where's this question here? Bring it up on the screen. Does Pacioli assume the XML submission is accurate to determine whether the human-readable financials are incorrect?
If so, there are cases where there will be inconsistencies between the human-readable data and the machine-readable data, which Pacioli will pick up. But assuming both the machine and the human-readable data is the same, these inconsistencies will show far more deeper levels or nature of inconsistencies with accounting rules, right? Did you use the right accounting concept, right? Tag, did you tag the right term, right? Did you tag it properly? And believe it or not, a lot of these financial reports are created by hand. Our Luca suite is 3 clicks. So financial disclosure is completely automated. So it doesn't make these mistakes. In fact, it prevents you from making any of these mistakes if there's a mistake in the report prior to the time it's imported into Luca. You cannot go any further until you remediate your mistake.
Right. All right. Thank you, Mitch, for that question. I appreciate it. Anyone else on LinkedIn or YouTube, please post your questions. And at the relevant point of the broadcast, I'll bring them up for Jason to answer.
So I'm going to
kind of resembles a U.S. voters map there that you see in November. Middle of the country is one color. Other parts of the country are another color. But it's interesting. When I loaded that map onto my phone, I was driving through downtown Chicago, and the overlay was still on. And as I'm driving through the streets and cities or highways, it's telling me as I drive by, oh, Mandela's Foods is not compliant with their SEC. Just as if you were passing a gas station. Non-compliant SEC filing. Non-compliant SEC filing. Just driving through Chicago. And it was quite amazing, the reach of this technology to bring it right to your phone.
We're going to do a few more bounties, right? Because now that everybody's filed their annual reports, we're going to do an annual report bounty to determine violations of fundamental accounting concepts, right?
That should be a good one.
And that's what this bounty covered. It covered the detection of fundamental accounting concept inconsistencies. Did you apply the right accounting rule? Was the calculation associated with that application correct, right? How many other facts were affected? How many other concepts were affected, right, by the inconsistency? So you can have one inconsistency, but it mucks up the whole works, right? Which is why CFAs, if you ask them, especially those people who work at BlackRock and CalPERS and a lot of the larger investment managers, they'll tell you, and depending upon who you talk to, they'll tell you they don't rely on this or they can't rely on this. Oh, just, I'm sorry to interrupt, but Gary Gensler's at it again. And he's telling us and everybody, come in to get registered. And I want to make something really, really clear. I have lived under the SEC's regime my whole life, okay? When he says come in and get registered, what he doesn't say, which he's doing a disservice to the whole crypto community, is either register, and there's no reason to walk in. You don't have to go to Washington, D.C. to file a full-blown registration statement, right? Also, you don't have to go to Washington, D.C. to determine what exemptions from registration are available. And there are many registration exemptions.
Where do you go?
Huh?
Where do you go?
You sit in your chair, it's $1 a page at your friendly neighborhood Edgar agent if you're filing a Form D where you're claiming a 506B as in boy or C as in Carl exemption, right? To sell securities to people who want to buy them, right? Now, a lot of the lawyers will tell you, well, we're worried about Rule 12G. 12G determines, 12G is where you are forced to register a class of securities, but only when you have more than 2,000 holders, right? A lot of people want to get a lot of tokens into a lot of hands of a lot of individuals. From a regulatory standpoint, that's not working, right? But if you haven't built your project yet, file a Form D. You don't need to go to the SEC. They don't even review a Form D. You publish a PPM and you furnish it to all of your prospective investors. Maybe you get, if you're raising $5 million, it's maybe 50 to 100 people. You're so far away from 12G, it's not funny, right? If you're raising 10, 20 million, you're going to go to VCs. That's probably 5 to 20, right? So you take the money, you build your network. By the time you launch your network, the holding period under Rule 144 will have expired. Now, trading venues are a completely separate topic.
Right.
But I swear to you, complying with SEC rules is so easy, a chimpanzee can do it. Seriously.
Well, I believe it.
At
At one point you told me. Sorry about that.
1 second. The lawyers won't tell you that. The lawyers want half your runway. When I hire a lawyer, I cap the fee at $50,000, maybe $60,000, because that's how much it costs to draft a PPM. If you go to a larger firm, maybe it's $100,000. I have personally never paid more than $150,000 for a full-blown registration statement for securities, right? Now, Gary Gensler, the chairman of the SEC, is saying come in and get registered because there's only been one registration statement that has been declared effective, and that's Stacks, right? Which was prosecuted about 3 years ago, something like that, right? Because they're going to have so many questions. When you file, they got to send you questions. You've got to cure all those comments. You got 20 days to do it. And then you cure the comments. They have 20 days to send you new comments. You have 20 days to cure those, and so on and so on and so forth, right?
Well,
but anyone who wants to be compliant with the SEC and who has hired, I'm sorry to give you an oxymoron, an honest lawyer, file a Form D, man. You don't need to worry about Rule 12G. You don't want 2,000 people. You want accredited investors. You want rich people. Why? Because they can counsel you. They have a lot of experience.
Right.
They can invest more money when and if you need it. So anyway, I didn't mean to get off track.
No, that was an important topic to bring up because since Gary Gensler was announcing that, What if 2,000 digital asset/crypto projects go to the SEC today and file? There's no way they can get it done, each one in 20 days.
No, what happens if people are actually going to listen to that, you'll go to the SEC and they'll never find you again. No, I'm only kidding. No, you're not going to go. You're not going to get anywhere. Look, the SEC wants crypto in the hands of the incumbent banks,
right?
Because they are the SEC's gatekeepers. Banks, broker-dealers, transfer agents, accountants, lawyers, and DTC. Those are gatekeepers. They are responsible for enforcing the SEC's laws, right? I'm going to stop sharing here because people are looking at the map, and so they're responsible. You have compliance manuals. You're required when you become registered with the firm or an employee. You have to sign a document said that you've received it, that you've read it, you understand it.
So what? Hold on, your sound is cutting out there just briefly. Your web internet connection just got a little bulky there for a second. Seems to be coming back.
Can you hear me?
Yeah, it's coming back now.
Yeah. Okay. So what I was saying was, the SEC wants all of crypto in the hands of the incumbent gatekeeper banks, broker-dealers, right? Because they're the ones that the SEC feels is responsible enough and better equipped enough and well-financed enough to follow the rules. And the SEC knows that the banks and broker-dealers know the rules.
All right, hold on a sec, Jason. We didn't hear the last sentence you had. You froze and your Wi-Fi dropped for a second there. But you're back, and I can hear you now.
Yeah. So as I was saying, the SEC wants you to come and register because they know that if you file a registration, it's really a fact-finding mission for the SEC. Anyway, it's not the topic I wanted to cover. It was just serendipitous that Gary showed up.
He's been showing up a lot lately. But I'd like to redirect the conversation back to Pacioli and what you were showing us. One of the things you brought up to me a while ago is a potential, and you mentioned it briefly here, is the pension funds and other people that have investments. Is this a tool that in which a large pension fund that has many investments in publicly reporting companies can use to easily monitor all their investments at reporting day?
Yes.
So this would take the work out of the pension fund's myriad of financial analysts to go over report after report after report, and they could use Pacioli basically to cull that list down quickly to hit the ones that have a lot of discrepancies and focus on that before they have to do the rest of the work. This is like an early warning system for them.
It's a warning system to tell them what they can and what they cannot rely on.
Well, that's absolutely amazing.
Plus, they can extract data in ways they couldn't before, right? Data aggregation is another problem with regulatory filings, right?
There seems to be a limitless amount of people or organizations that could use an early warning system for things like this. I can't imagine how many people would have wanted to know this information prior to all these banks having, publicly reported trouble. I'm sure all of them knew they were in trouble internally. But having this information quickly for, large investment funds or even really anyone that has a lot of money on deposit, I can see plenty of services for Pacioli to do it. Never mind, we've been talking about Pacioli here. This is just half the equation. The other half is the Luca software, which companies and entities use to report and get all their information out into the right format. Jason, if you want to just explain the other half of the equation here in a few minutes about Luca and what that does.
So Luca is where an enterprise project, accountants, and regulators can use. Regulators can create financial reporting taxonomies to prescribe for regulatory specifications using Luca. You can create financial reporting models. I happen to be in the Middle East, one for a conference and two for meetings for creating reporting models that don't exist yet, that are badly needed, that are usually hand-rolled, which means they're not that reliable. And then an enterprise can use it to create and articulate their financial state, right? Luca is also used to create rules, controls, right? So you'll create all sorts of controls inside of Luca and output those controls, which you'll be able to claim as an NFT. You commit it to the network in Luca, and every time they're used, the creator gets paid a royalty, and the validator that proved that the rule worked correctly also gets paid a royalty.
Well, the results that it produces, and watching Pacioli work on the screen as you're doing it, in the past you've told me how quick it works, and in my marketing and talking about it, I use the phrase in minutes. Sometimes I use the phrase in seconds, and it, in essence, went through the whole thing in about 90 to 120 seconds for Silicon Valley Bank.
Deutsche Bank took almost 4 minutes, and I'll tell you, we don't have the time to do that today, but there were 400, I don't know the exact number, over 400 inconsistencies in Deutsche Bank's 2021 annual report filed with the SEC.
Hello, guys. Hello.
400.
Hello. Hi. Nice to meet you.
Hello, Ahamen. I've opened up the chat, Jason, in Telegram. I don't know if you can hear them or not, but Ahamen, do you have a question for Jason?
No. I was about to ask you something.
All right. Well, we're gonna wait for the end of our AMA for that, and please type it in the chat. I appreciate it. If you have a question for Jason,
Well, we are limited on time. So if he wants to ask a question, let him ask, because that actually might provoke other questions from other people.
All right, let's. Ahem, if you have a question relevant to the Auditchain Luca or Pacioli software, let us know.
No. Actually, I'm having a little doubt. So I was a beginner in this cryptocurrency and a blockchain. So I just did a researcher in a previous company called Orion. So I was about to start my blockchain journey. I just want to need some guidance regarding this.
Well, we're not covering new entries into the blockchain space on this particular AMA.
Right. Thank you, Ahmed, for your question. We're more than willing to help answer your questions. This particular AMA is related to questions about our Luca and Pacioli software. But feel free to drop me a DM, and as part of the DYOR group, we'll be glad to answer your questions for that. Jason, I've had a direct message from somebody that said, "Hey, could you just randomly run a company like Tesla or something like that for us?"
Yes, the answer is yes. You want to see Tesla? Let's do Tesla.
All right, you'll have to reshare your screen for me here.
All right.
All right, give me 1 second to bring the link up here.
Can you see?
Just give me one second here. Yes, we can see it.
Okay, so let's pull up Tesla and let's go to their 10Ks and Qs. In fact, their last K was filed on end of January. Again, for those who are watching, we're not going through the actual numbers here. This is the purpose of this is just to go through a demonstration of submitting a machine-readable financial report filed with the SEC through Pacioli to detect where all of the inconsistencies are, right? So I'm going to go back and share this screen, which is our Pacioli user interface. This is not what we're going to launch commercially. This is for the dev team. It's owned by them. This is what they use for development and testing.
While you're doing that, we've got a comment from Telegram, one of our viewers. Sorry I have to go, but super cool stuff, Jason. You're the man. I'll share this event live around the internet for everyone to see.
Cool. Open up the instance document. Let's copy that.
I want to reiterate what Jason just said. What you're looking at is the developers portal for Pacioli, and the end user's user interface. It will be a cleaner interface designed for a user, not for a developer. But it shows you the good part of this is that while you're running that, it shows us what's going on as it runs each rule and goes through everything. We see it happening in real time.
This could take anywhere from 1.5 minutes to 3 minutes. So, okay, we got action.
All right, while it's finishing, someone asks, what's the launch time for Luca?
We're going to launch Luca with our first customer, which we're in the process of working on now. Again, people ask, there's people in the community that are like, how come you don't have clients already? How come you not? We're not selling a couple of smart contracts. This is very complex machinery, which goes under examination by a CFO, a controller, an executive staff, and a lot of it has to be explained. In the crypto space, they've never heard of anything like this before.
Right.
They're really impressed with it all, but they need to learn before, there's a lot of unknowns for them, right? Which means they're also going to go back to their auditor, if they have one, or their accounting firm who typically does their accounting, and go through a process of due diligence, right? These are not short sales cycles.
Right. And that, what you were explaining, is the Luca software, getting it into a company's workflow. The Pacioli, analyzing the results, can be used by anyone that contacts you and says, I want to be able to do this for my hedge fund, for my VC, for my pension fund, or for my own company, just to read my own financials. Yep. Hold on. You got to restate that. Your Wi-Fi dropped real quick. Sorry, Jason, we don't have you there. Give it a few seconds there to come back. I think your computer's downloading a lot of data.
Can you hear me now?
Now it's clear. It disappeared as soon as I said that. Let's let your Pacioli report run here. It seems to be bringing down a lot of data in the background and on your Wi-Fi connection. It's doing it. We also have another question. We have also filed a Pacioli Luca to run the nodes on its own for a non-technical guys. When is the ETA for this? I think he's referring to the Blocks partnership. Yeah, sorry, Jason. The audio from your computer is lacking while that's running. I'll let you know when I can hear you because I can hear your background noise.
Can you hear me now?
Yes, yes, we can.
Okay. So what I was trying to say was we have calls every week with blocks. Once we get to a certain point, that's also complex too because it's it's a, how should I say it? It is a virtualization orchestrator that they're dealing with. Plus, they need an impression of our whole code base. So this was a big implementation for them. But they're almost ready. Here is Tesla, right?
Let's let your browser load all this before you explain it here. All right, I think when you come, I think it's just scrolling that page is doing it, but go ahead.
"29 calculation inconsistencies and 20 disclosures that were excluded."
Excluded because they were incorrect or they forgot to file them.
Here are the required disclosures. This is the rule, right? Changes in equity rule. That's the rule that we run. And it wasn't included. It didn't detect the disclosure here. Right? And then if I go back to a calculation, this is a list of all of the inconsistent calculations. It's a total of 29 of them.
Anything major that stands out to your reporting eye?
Takes a little longer to do that, but here's a concept. Current income tax expense benefit in disclosure income taxes, right? Or provision for income tax. It was calculated as current income tax expense benefit equals current federal tax expense benefit plus deferred state and local income tax expense benefit plus current foreign tax expense or benefit, right? These are the inconsistencies here. So these are rules that are run to determine if that the calculation was correct. Obviously, it looks it looks very similar to Silicon Valley Bank, but that's just our user interface.
Right.
If you're an accountant or a CFA, you understand these terms, right? You understand deferred income tax expense or deferred income tax benefit, right? You understand things like here. Current assets, operating leased assets, right? Other assets, non-current assets. I mean, most professionals understand these terms, but most accountants know how they understand the logic behind them.
Right.
Right.
And they understand when it's red. Like I said, red's never good in accounting and money.
Red's bad. Right.
Well, to Kurt, who texted me that question, I appreciate it. That was good to run something live there. It's good for all of us to see.
Who was it?
A guy named Kurt that I know, that he sent me a question.
Okay. One last thing. A lot of people have seen this. I'll share it anyway.
I think you went to a tab that you're not sharing.
Hold on. This is a batch output analysis.
Yeah, give me 1 second to bring it up here. When you redo it, I got to take a second to put the new code in. All right, it's coming up. All right, we see everything, Jason.
Okay, so this is a different process because it involves multiple submissions at once and a multiple output that's put on a dashboard, right? This just happens to be 7 of Coinbase's reports, but we have dashboard of the S&P 100, right?
Yep.
So if you're a venture capital firm, you can now condition all of your companies that you invest in your investment agreements. You can put a provision in that says that they have to submit to the Auditchain Protocol so that the venture capital firm
can see the results.
Have a dashboard of the proof of financial and operational state of all of the companies they invested in, which is also a get out of enforcement free card. Right?
Keep the legionnaires at bay.
That's right. So plus no VC, every VC I talk to, they're sick and tired of chasing so-called CFOs for unreliable information, which when they get it, it's Excel spreadsheets conditioned by them, written by hand by them. The companies, I mean. And it's really not, it gives you an idea maybe, assuming they're honest, but it's not going to get you out of hot water with the SEC. And that you can thank Sam Bankman-Fried for, because the SEC is on tour at every VC firm, starting with the bigger ones, to determine their due diligence practices on an initial basis and on an ongoing basis. If you have this is your get out of enforcement action. Card.
I think we need to print those Monopoly cards up to get out of jail free. We do have a question from Telegram. RL says, I know the team is working a lot behind the scenes. We really appreciate that. Let us know about staking and rewards for long-term holders if there will be additional, I'm adding to his question here, if there's going to be an additional staking period.
There will be additional staking. You'll be backing actual Pacioli node operators, so there'll be no expiration on those staking contracts. You can stake and redeem at will.
Well, that's good news. And not only that, it's not just a stake for just staking's purpose. You're actually helping the protocol do its job by staking.
That's correct. That's right.
In Telegram, sorry, RL, there we didn't disable rows, so too many comments in a few minutes gets them deleted. Next time we'll remember to delete rows or pause rows there. But he said thank you very much for answering that. We appreciate that. See if any other questions here.
We're going to do these more frequently, right? We actually enjoy doing. We're at the point where we want to do more product demos on these AMAs. But it is Ramadan, and I am in someone else's territory, and they celebrate Ramadan, and unfortunately, we have a hard stop.
Well, ladies and gentlemen, you got an hour-long demo of Pacioli and the real-world timing of how to run reports and the use cases for it. And the more that I participate in these with Jason, the more I learn about them. And I can tell you, he hasn't even hit the largest market yet talking about it, which is the municipalities in the U.S. that are going to need to be reporting accurately. And so while we talk about the large number of VCs using this software or having their invested companies using it so that they can see accurate information, We talk about reporting entities using the Luca software so that they can provide accurate information and accurate reports to the Pacioli nodes so that everyone sees they're good to go. Two things are going to happen. One, I think we're going to be busy on the sales front. And two, I think by pure market pressure alone, companies are going to do a better job reporting. Eventually nobody's going to want to be on that red X list.
So on March 10th, the UK put out a release, the ICAEW. Parliament is launching an inquiry into local government financial reporting. That's going to be fun. And I'm going to be in London next week.
Well, good, Jason. As always, people ask. They ask me every chance they get. Any new announcements coming up on our next episode, or anything you want to drop some alpha here, as they say in the digital world.
We're not going to drop anything right now.
Got to at least ask that question for everybody. But as I always say, stay tuned to future episodes of this when Jason will release information about new partnerships and what's going on with the company in general and the adoption of the protocol. Any last words, Jason, before we let our viewers go for the day?
Stay tuned. That's it.
All right, everybody.
It's going to be fun.
From Chicago, Illinois, and Dubai, the United Arab Emirates, this is a worldwide business, and we provided you a worldwide AMA today with great information. So thank you, and we will see you again next week.